welcome back to the Afia Business Morning. This is the Eastern Business Report. With the full implementation of the new Nigeria Tax Act this January, the financial landscape has shifted for both salary earners and business owners across the region. From the new 800,000 naira tax-free threshold to the removal of corporate income tax for small business earnings under 50 billion naira. These reforms are designed to ease the economic burden on the working class. But how do these policies actually translate to your bank account? Does a slightly higher take-home pay mean much when placed side by side with our current inflation rates? And for our regional business hubs, how can entrepreneurs leverage these new tax breaks to scale their operations? To help us navigate these new tax reforms and what they mean for your money, I am joined by Kalu Aja, a financial analyst. You're welcome to the program, sir.
Hi, thanks for having me.
All right, so the Nigeria Tax Act has taken effect this year. So from a macroeconomic perspective, what is the core philosophy behind this new tax framework?
Well, just to modernize and simplify, the tax laws that we had before now were really archaic. We were taxing television sets, and we couldn't tax residents that were doing a job in Nigeria but worked for, say, an IT company abroad. We had difficulty taxing them. So this new tax reform is to make it more modern, more simplified, so that way we can capture more parts of the economy and, of course, make it easier for small businesses to not to pay taxes, so like give them a tax break. So it's simplification and modernization, more or less.
Okay, so for a mid-level professional in Enugu earning between 5 million to 10 million annually, what practical steps should they immediately take with their HR or payroll to maximize their legal take-home pay?
Well, the key difference with this new tax law is that you have to go and what we call buy the deductible. In the old system, you got an automatic tax break, 20% of your gross plus 200,000. You don't have to do anything. Once you earn a paycheck, you get 20% tax allowance. With this new tax law, you have to go do things like buy a deductible to get the tax to come down. So what I mean is this: if you earn, for instance, $1 million, according to the tax law, you have to file. You get 800,000 tax-free. That other 200,000 is available for tax. You've got to go do something. Either you go buy, you invest in a pension scheme, you open a PFA account, or you buy life insurance for yourself, for you and your wife, or you pay rent, capped at 500,000, or you do the NHIS, or you do the National Provident Scheme. When you do these, you can deduct what you are investing from your income, so you don't pay taxes. If you don't do anything, then you'll be taxed on the full income that you make. So the point is, if you don't go out and buy the deductible, you are going to pay the taxes. That's the key difference. So talk to your HR, get the list of the deductibles, and go out and invest in those deductibles.
Okay, so shifting to businesses now. The new law exempts enterprises with an annual turnover below 50 million naira from corporate income tax. So is this the lifeline our regional SMEs, have been waiting for, or is that something else that we need to know?
Yeah, kind of. It's turnover. If you have turnover of less than 100 million naira, you will not pay. So you file, but you will not pay. So what you also need to do is to make sure you keep receipts. That's going to be key, because you simply can't say you have to keep your receipts. Number two, there's a provision in the tax law that says if you don't pay import duties at the ports and you don't charge VAT, you can't claim your expenses. So if you're doing business, if you're buying from someone, you're going to make sure you get your tax receipts that show your VAT. If you're buying goods from someone, also want to make sure that the person paid import duties at the port. Otherwise, you can't claim at your end those expenses. So keep that in mind. So it's 100 million turnover, then you are basically exempt that income from taxes. That's how they have it. So it's simplified. It's targeted at small businesses. They don't want to burn them with taxes. You still pay VAT. This is just the corporate income tax part of it. Yeah.
Oh, very well. That's much more simplified. So with the electronic money transfer levy now being transferred exclusively to the states, How should state governments in the East reinvest these funds to support local commerce?
Productivity, that's the key word economists use. We want to do productivity gains. So how can you make more with less? The key thing Nigerians need is power. And the state governments now have the ability to generate power. So I would say any revenues that you get, try to ensure that your state has got cheap, reliable power. That's the surest, simplest way to boost productivity and, of course, to boost wealth, which then generates tax revenues for you down the road. So if I'm a governor, I'm looking at how can I create power? Apart from insecurity, it's power that is the most important thing right now for the business community in any state.
Okay. But taking home slightly more pay is great, right? But inflation is actively eroding purchasing power. How should individuals deploy these new tax savings to actually hedge against inflation?
Well, the key word is to invest, right? Because inflation eats your purchasing power. But when you invest, you're able to gain more purchasing power. So invest where? It depends on how long you want to invest. If you're a younger person and you can take more risk, equities seem to beat inflation over a longer period of time. If you're more of a retiree, you have very, very limited options because you really can't go buy equities or tie your money down. So you're going to be more exposed to inflation than if you are, say, younger and you want to invest in, say, property or equities. But the key word is this: you've got to invest the excess, got to cut down your expenses, buy in bulk, so you can take advantage of the bulk discounts. If you hold cash, you're in trouble because cash is what's available. That's going to be attacked by inflation. But if you hold assets, then you are in a better place. So it's a problem because you don't earn enough in Nigeria. But if you then try to invest in an asset that can compound faster than inflation, that's what you want to do.
Because you often emphasize, the difference between holding cash and owning assets. So under this new tax regime, how are investments like mutual stocks, mutual funds, bonds, stocks, and capital gains, treated?
Well, if you can afford to, always invest in those collective schemes, right? The law says if you invest in a collective scheme like a mutual fund or unit trust, the income you get is not taxed. So that's a key advantage for you. If you want to put your funds in there, that would basically help. You don't want to be in cash, again, like I said, for inflation. But you also want to be very careful that where you are exposing your funds to, it's safe and it's in line with your objectives. There's capital gains taxes, which you're going to pay if you sell. So if you don't sell, you can keep on carrying those gains into the future. So the key part for you is that taxes are, if you make money, you pay taxes. So the point for you is go make the money. Then you can talk to a professional and say, how can I reduce legally my taxes? You can't evade taxes, but you can legally reduce those taxes and then reduce how much you are exposed to the government.
So for a regional entrepreneur who now pays zero corporate tax, what is the smartest way to invest those retained earnings back into the business?
Well, again, if you're a businessman, if you do any expense that is going to be used to create revenues in that business, it's tax-free. So if I make 100 million and I turn around and take 80 million and I expand my business, I don't pay tax on that 80 million, but my wealth has increased by 80 million because I own the business and I've invested in the business. So as long as you are reinvesting your returns, you are avoiding taxes, but you are increasing your wealth. Very, very simple. You have two bosses. You make ₦1 million of those bosses. If you take the ₦1 million into your bank account, then of course you're going to pay taxes because that's income to you. But if you take that ₦1 million and you buy a new boss, you don't pay taxes because you've invested in a capital asset, but that capital asset is still owned by you. So your net worth goes up, but your tax hit actually goes down because you get an allowance because you bought an asset. So think in terms of investment. CapEx reduces your taxes. Expenses used to create income is also very, very helpful. So if you look at it that way, that's how you want to approach how you want to do an investment in the new tax policy.
So if the government is giving tax breaks to low-income earners and small businesses, they will inevitably look to collect revenue elsewhere. So where do you expect the tax authorities to focus their enforcement for the rest of 2026?
Well, with taxes, it's simple, right? If you reduce the benchmarks, right? You broaden the base. You actually make more money if you reduce the tax rate, but you broaden the base. It's what they are doing right now. They are going after, for now, the corporates, the oil and gas, the larger companies. That's what they're going after now to get revenues. So they made it a bit simplified. They want to do electronic filing. They're trying to link your BVN to your NIN, to your corporate, to your ration number with CAC, with your import duties, with your forest allocation. They are linking everything up. So by using technology, they can raise more monies. That's what they're trying to do. So they might not raise the rates, but just by being more efficient in how they're putting taxes, they can raise more revenues. Yeah.
Okay, so what is one financial habit every worker and business owner in the Southeast must adopt this year to survive and thrive under this new economic reality?
Yeah, cut your coat according to your cloth, not your size. So spend within your means. It's the surest way to get wealth is to spend less than you own. Invest early, invest consistently, but don't try to borrow. Don't try to borrow to keep a lifestyle. If you can't afford it, leave it alone. Try to cut your coat according to the cloth, not your size. Don't say, I have to do DSTV. If you can't afford it, don't buy it. Do your necessary expenses and leave the rest alone.
Okay, so I've been able to get just a number of things to really wrap this whole thing up. But one more question. So there's a direct link between taxation and public demand for accountability. Will these reforms and digital tracking of taxes finally force citizens to ask harder questions about how state budgets are spent?
I believe so, and I hope so, because now we're going to be paying taxes. So we want to ask how the local governments and how the state governments are using our taxes, not just the federal. But we want to ask those questions to the guys near you, your local government. What are they doing with the taxes, with the FARC that they're getting? That's what I hope this will generate, that when workers see more of their pay going towards taxes, they then ask questions. Where's the schools? Where are the hospitals, the primary care hospitals around us? We're giving you the taxes. What are you doing with it? So that's the hope, that this tax is going to generate that public advocacy around fiscal responsibility from the guys that we elect. Yeah.
Very well. Thank you so much, Mr. Kalu Aja. It has been a pleasure having you on the program. Truly insightful, I must say.
Thank you so much.
All right, and we have to end the show now. And that's the much that we can take on the Eastern Business Report. The Afia Business Morning returns tomorrow. Many thanks for staying with us. My name is Cherry Ojukwu. Bye for now.